Nigeria has continued to grapple with shortage of foreign exchange supplies across the financial markets as demand outweighs supplies and rates overshoot their boundaries at the official, investors and exporters window, as well as the parallel market. While this trend has prevented foreign portfolio investors from repatriating their sales proceeds, it has also held back prospective investors who would have returned to invest. To speak more on this is the head of portfolio management at Commercial Partners, Victor Aluyi. Hello, Victor. Good morning. Thank you for joining us.
Hi. Morning. Thanks for having me.
Now, between June 2017 and February 2020, foreign exchange was fairly stable with less volatility. But do we know what Nigeria's balance of payment looks like since March 2020 till date?
Well, I think the foreign exchange situation has been under quite some pressure, for the better part of this year. If you look at the balance of payment position for Nigeria, particularly data that was released for Q1 2020, we saw the steepest decline that we have seen since the first quarter of 2014. So essentially, balance of payment for Nigeria right now is a negative 11.1 billion. And that's coming from about a positive 6.2 billion at the end of 2019 and 2 billion in the first quarter of 2019. So clearly, the balance of payment position has been significantly stressed, and it's all owing to the whole COVID-19 challenge. It's also important to recall that, just before COVID-19 hit, the Nigerian economy was essentially on the mend and trying to recover from its first recession in about a quarter century. So clearly a lot of stress points, particularly with respect to the external position for Nigeria.
Now, no doubt the turbulence has affected the economy largely, putting the external reserves under more pressure. How would you describe strategic measures that the CBN has employed so far to manage that market?
Well, I think what the CBN has essentially continued to do is to try and protect, the precious reserves. For a bit of context, if you look at a year ago compared to where the reserves are now, reserves are down about 9.2 billion. We've seen a steady monthly decline in those reserves since late last year. Yet to date, reserves are down by about 2 billion. They were down about 5 billion, as a matter of fact, towards the end of April. However, the 3.5 billion that came through from the IMF sort of provided some succor. So reserves have been under pressure. We are currently around 35 billion, essentially about 7 months of import cover. The CBN has continued to, ensure that those reserves are, protected as much as possible. We've seen adjustments in official rates. Since March, I would say that we've had about a 24, almost 25% adjustment from about 305 to 360 and now to about 380. So clearly, these are moves by the Apex Bank to sort of, properly align that market, because in properly doing that, it can also sort of, protect the nation's reserve position.
Now, how has the OPEC Plus production measures aided Nigeria's oil production and capital flows in this?
Well, I think the OPEC cut situation doesn't exactly bode well for Nigeria, particularly over the next couple of months. You will recall that Nigeria was one of those countries that had, overshot its quota. And part of what OPEC had decided when it decided to, reduce those cuts from 9.7 to about 7.7 was that for those countries that had overshot their quota, Nigeria, Iraq, they were going to basically, further reduce their own production to compensate for the overproduction that they had witnessed over the last couple of months. So right now, production for Nigeria is about 1.3 billion. So clearly that is going to have implications, for revenue and also by extension on the FX situation. Also remember that, in spite of the fact that crude oil has been on the ascendancy over the last couple of months, we still remain easily 20% shy of where we were at the beginning of the year.
But for the past 2 months, we've seen some kind of stability in the crude oil price hovering around $40 per barrel. Why hasn't this current price, why is it not a catalyst for foreign portfolio investors?
Well, for foreign portfolio investors, I think the key issue really is around dollar liquidity. For context, right now you have about a $5 billion backlog funds that are waiting to be repatriated, particularly by foreign investors. So clearly the liquidity situation is not very encouraging for a lot of foreign investors, because for them, if I'm bringing my money to invest, I have to be sure that whatever it is that I need to leave, I can convert and also leave. But over the last couple of months, they've not been able to do that. So that sends some sort of signal that is not too comforting to foreign investors. So clearly that has essentially kept them at bay. If you look at the sort of volume and value that we've seen, particularly on the Nigerian Stock Exchange over the last couple of months, you've seen that decline quite significantly. And that is also a reflection of the fact that a lot of these foreigners are unable to come into the market or do not want to come into the market because of that liquidity situation with the dollar.
So what are your foreign portfolio counterparts telling you about the unification of the foreign exchange rates by the CBN?
I mean, it's a move in the right direction. Clearly, there needs to be further adjustments, even from where we are currently. Yes, the CBN has made two adjustments so far. There still needs to be some further adjustments to, clearly align and put that currency in the light of the reality of the situation. Also, liquidity is of the essence. Liquidity is extremely important. So for foreign investors, they need to be sure that whenever it is that they need to take their investments out, they have that liquidity to do that. So I think liquidity remains the biggest concern for a lot of the foreign investors.
Now, some economists and past government officials have suggested that the CBN releases more FX from the external reserves to the Bureau de Change operators in order to manage the rates. Do you see that as a strategy that could create a difference?
Well, I think what the CBN has essentially done is to try and take care of, that I&E window segment of the markets. For the Apex Bank, a lot of the transactions that go on, particularly within the parallel market, are largely speculative and do not reflect, real economic activity. However, I think that, the CBN, apportioning dollars to that market would probably help. Nevertheless, I don't know that the CBN has the luxury, particularly with the reserve position, to actually continue to do that or to want to do that. So it's really a tough balancing act for the Apex Bank. But I think that could help. But then again, how sustainable would that be, really? That's really the true question here.
Now, the government is waiting for a $1.5 billion concessional loan from the World Bank. How much of impact is this fund likely to have on the backlogs of demand in the Forex market?
Well, like I said earlier, we have a backlog of about $5 billion. As a matter of fact, if you do a deep dive into that reserve figure, we have close to 13 trillion worth of FX swaps that mature over the next 1 year thereabout. For the remainder of this year, we have about 7 billion worth of those FX swaps that mature. So all of that will still further put pressure, on the naira. The 1.5 billion was expected to have come in by now. However, I think the board meeting of the IMF, of the World Bank, that was postponed basically led to a delay of that. Also, the World Bank expects even some further unification of the currency as a major precondition for the disbursement of that loan. We expect that when the board reconvenes, I think sometime in October, that loan should be disbursed. But 1.5 billion, I don't know that it will make any significant impact. We got about 3.5 about a couple of months ago. We saw the impact that it made, not so much. So 1.5 billion, particularly on the FX situation, I'm not sure that the impact would be significant in the medium to long term.
And so for you, do you see a further adjustment to the exchange rate, perhaps before year end?
I mean, I alluded to that, in my earlier comments. I think that we're likely to see some further adjustments from the Apex Bank. I think what the strategy is just to basically continue to take it, if you will, baby steps and gradually. But I think that we're likely to see, some further adjustment, at least before the year runs out, the magnitude of which really remains to be seen.
Now, have the various initiatives of the central bank, as the prohibition of FX for some items, the development of finance programs, and the stimulus measures, all had any positive impact?
Well, I think what all that has basically sought to do is to, protect the reserves, really, and continue to give the Apex Bank, ammunition, if you will, with which to continue to defend the naira. These are extraordinary measures in extraordinary times. Really, for me, the issue is about and around the sustainability of these measures. For how long can the Apex Bank continue to sustain these measures, and what the long-term impact on the nation's external position would be, really? So I think those are some of the major concerns.
And what do you make of the priority now given to gold mining and the fact that the purchase will be in naira?
Well, I think it's all still part of the federal government's plan to essentially diversify, the revenue base of the economy. I don't expect any significant impact over the short term. Yes, there have been certain amendments to the laws now that make artisanal or alluvial mining illegal. There's a framework now that ensures, better investment into that sector. So obviously, we're likely to see even more revenues from there. But in the short to medium term, that impact would not be significant. Stuff like this actually needs time, and certainly does take time to work and for us to see the impact. So in the near to medium term, I think that the impact is not going to be significant. But of course, over a long-term period, we're likely to see the gains from that move.
And what can you tell us about the performance of Nigeria's Eurobond securities today?
Well, so Nigerian Eurobonds has basically been risk on over the last week plus thereabouts. Essentially, Eurobond yields across the Nigerian curve are basically pretty much back to their pre-COVID levels. So it speaks volumes as regards the risk sentiment around Nigeria. It's also important to note that with the ultra loose monetary policy that's going on around the globe right now, there's plenty of cash essentially looking for yield. With the continuous decline in U.S. Treasury yields, you would obviously see monies looking for better yield pick-up elsewhere in names that have decent credit quality. And I think that's what we've seen on the Nigerian curve. However, I expect to see some sort of profit-taking over the next couple of days on that curve.
All right, thanks, Victor, for your time. Victor Aluyi is the head of portfolio management at Commercial Partners.